You drive for Uber or Lyft, you have car insurance, and you assume you are covered if something goes wrong. Here is the problem. There is a window of time where your personal insurance will not cover you, and Uber and Lyft barely cover you either. If you get into a serious accident during that window, you could be personally responsible for tens of thousands of dollars in damages, medical bills, and legal costs. And most rideshare drivers have no idea this gap exists. This video is going to walk you through the 4 insurance periods every rideshare driver needs to understand, show you exactly where the dangerous gap is, and explain how to close it for as little as a few dollars a month. Welcome to the Freelancer's Wealth Blueprint. We help gig workers and freelancers protect their income, reduce risk, and build real financial security. If that sounds like what you need, subscribe and hit the bell so you do not miss a thing. Let's start with how rideshare insurance actually works. When you drive for Uber or Lyft, your insurance coverage changes depending on what you are doing at any given moment. There are 4 distinct periods, and each one has completely different coverage rules. Period 0 is when the app is off. You are just driving your personal car. Your regular personal auto insurance policy applies. No issues here. Period 2 is when you have accepted a ride request and are driving to pick up your passenger. Both Uber and Lyft provide $1 million in liability coverage during this period, plus collision and comprehensive coverage with a $2,500 deductible, but only if you already carry collision and comprehensive on your personal policy. This is solid coverage. Period 3 is when the passenger is in your car and you are driving them to their destination. Same $1 million liability coverage applies. Same collision and comprehensive terms. Again, strong coverage. Now here is where it gets dangerous. Period 1. Period 1 is when your app is on and you are waiting for a ride request. You are logged in, available, cruising around looking for your next match. You are clearly working. You are using your vehicle for commercial purposes. But you have not been matched with a passenger yet. During period 1, Uber and Lyft provide only $50,000 per person in bodily injury liability, $100,000 per accident, and $25,000 in property damage. That is it. No collision coverage. No comprehensive coverage. If you rear-end someone and it is your fault, or if your car is damaged in an accident during period 1, there is 0 coverage from Uber or Lyft for your own vehicle. But it gets worse. Your personal auto insurance probably will not cover you during period 1 either. Most personal auto policies explicitly exclude commercial activity, which includes driving for hire. The moment you turn on that Uber or Lyft app, most personal insurers consider you to be engaged in commercial driving. If you file a claim and your insurer discovers you were logged into a rideshare app at the time of the accident, they can deny your claim entirely. So during period 1, you are stuck in a gap. Uber and Lyft provide minimal liability-only coverage. Your personal insurer may deny your claim, and you have no collision or comprehensive coverage from anyone. If you cause an accident that results in $80,000 in injuries to the other driver and $15,000 in damage to your own car, Uber's period 1 coverage might handle the other driver's medical bills up to the $50,000 per person limit, but the remaining $30,000 in injury liability and the entire $15,000 for your own car, that could come out of your pocket. And here is a detail many drivers miss. Uber and Lyft's period 1 coverage is contingent. That means they only pay after your personal insurer denies the claim first. So your personal insurer denies you because you were driving commercially. Then Uber or Lyft's contingent policy kicks in, but only for the limited liability amounts. Your own vehicle damage? Not covered by anyone. This is the scenario that has left real drivers facing 5-figure repair bills and even lawsuits. A driver in period 1 gets into a serious accident. Their personal insurer denies the claim. Uber's contingent coverage handles some of the third-party liability, but not all of it. The driver's own vehicle damage is completely uncovered. And if the injuries exceed $50,000 per person, the driver is personally liable for the difference. Now let's talk about how to fix this. The solution is a rideshare endorsement. A rideshare endorsement is an add-on to your existing personal auto insurance policy that extends your coverage into the periods where your personal policy would otherwise exclude you. It bridges the gap between your personal coverage and the coverage Uber and Lyft provide. With a rideshare endorsement, your insurer acknowledges that you drive for a rideshare company and agrees to cover you during period 1, and in some cases during periods 2 and 3 as well. Here is what it costs. A rideshare endorsement typically adds between $15 and $40 per month to your existing premium, depending on your insurer, your state, and your driving history. That works out to roughly $180 to $480 per year. Some insurers are even cheaper. USAA offers a rideshare endorsement starting at $6 per month. Allstate's Ride for Hire endorsement typically runs $5 to $10 per month. State Farm's endorsement adds roughly 15 to 20% to your current premium, which averages around $23 per month. Progressive, Geico, Farmers, Mercury, and Erie all offer rideshare endorsements as well. Compare that cost to the risk. An extra $10 to $30 per month versus the possibility of being stuck with a $20,000, $50,000, or even a $100,000 bill because nobody's insurance covered your accident. This is one of the clearest risk versus reward decisions in all of gig work. Here is how to get one. Call your current auto insurance company and ask if they offer a rideshare endorsement in your state. If they do, add it to your policy. If they do not, shop for a new insurer that does. When you call, tell them you drive for Uber, Lyft, or both. Ask specifically what periods their endorsement covers. The best endorsements cover period 1 fully and supplement periods 2 and 3 as well. One more thing to be aware of. Insurance laws for rideshare vary by state. Some states like New York require higher coverage minimums during period 1, with $75,000 per person and $150,000 per accident. Colorado mandates $200,000 per person in UM/UIM coverage during active trips. And starting January 1, 2026, California's SB 371 actually reduced certain passenger trip coverage requirements, dropping UM/UIM from $1 million to $60,000 per person. That means in some states, coverage is getting weaker, not stronger, which makes your own endorsement even more important. Here is your action plan. Call your auto insurer this week. Ask about a rideshare endorsement. If they offer one, add it today. If they do not, get quotes from State Farm, Allstate, Progressive, Geico, or USAA. Budget $10 to $30 per month for this coverage. And never assume you are fully covered just because Uber or Lyft says they provide insurance. The gap is real, and closing it is one of the smartest financial moves you can make as a rideshare driver. Subscribe for more videos that help gig workers protect their income and build wealth. See you in the next one. This content is for educational purposes only and does not constitute insurance or financial advice. Consult a licensed insurance agent for guidance specific to your situation and state.